Salud, everyone. This is Max Bot channel. Now we are running a 1-month promotion. Take the bot with an average passability of 85 for free and forever and get signals without restrictions. The link is in the description. Outside the promotion you can get the bot only for a fee, so hurry up. Now with its help I will increase my deposit to a cool amount, starting with just $1. At the end of the work I will summarize the results. I will enter each trade for the full amount of the deposit. I start on the currency pair Euro, American Dollar OTC, timeframe 1 minute. Artificial intelligence is very quick to produce a signal. Higher. I've increased the speed of price movement to save you time. Guys, right now in front of you are screenshots of testimonials from people who are making money with MaxBot, day after day. You too will become very rich by using it regularly. And you will also have access to VIP chat with predictions from experts, once you start using the bot. You can see all the reviews in a special Telegram channel, link below the video. I complete the first trade successfully, the bot did well. Now I will tell you about the impact of geopolitical conflicts on currency markets. Geopolitical conflicts have profound effects on global financial markets, influencing everything from stock prices to commodity costs, and currency markets are particularly sensitive to these disruptions. Currency pair trading on options platforms, where traders make short-term predictions on the price movements of currency pairs, requires understanding these dynamics to anticipate price shifts effectively. When geopolitical conflicts arise, they often create economic uncertainty, affecting trade policies, commodity prices, interest rates, and risk appetite among investors. This uncertainty leads to heightened volatility in currency markets, presenting both risks and opportunities for traders. Geopolitical events, such as wars, trade conflicts, political instability, and sanctions, create economic uncertainty that impacts both the supply and demand of currencies. Several key factors explain how these conflicts influence currency markets, market sentiment and risk aversion. When a geopolitical conflict arises, investors' risk tolerance tends to decrease as uncertainty increases. This leads to a phenomenon known as risk aversion, where investors seek safer assets, often referred to as safe haven assets, such as the dollar USD, Swiss franc CHF, and Japanese yen JPY. The increased demand for these currencies tends to drive up their value relative to riskier assets. Commodity prices and resource-dependent currencies. Geopolitical conflicts can disrupt global supply chains, impacting the availability and prices of commodities like oil, gas, and precious metals. For example, the Middle East, a region frequently impacted by geopolitical tensions, is a major supplier of crude oil. Any disruption in oil supply due to conflict can increase oil prices, which in turn affects oil exporting countries and their currencies, such as the Canadian dollar CAD and the Norwegian krone NOK. Options traders who understand the link between commodity prices and currency values can take advantage of these shifts. For instance, if a conflict causes oil prices to rise, it may lead to an increase in the CAD, which is tied closely to Canada's oil exports. This creates potential opportunities in pairs like USD, CAD or CAD, JPY, where traders can predict whether these currencies will strengthen relative to others. Economic sanctions and trade restrictions. Geopolitical conflicts often lead to sanctions and trade restrictions, which can cripple the economies of targeted nations and affect their currencies. When a country faces sanctions, its currency typically weakens due to reduced foreign investment, limited trade, and lower international demand. Options traders need to stay informed about sanctions, as they can have a prolonged impact on affected currencies. Safe haven currencies are those that investors flock to during times of political and economic uncertainty. These include the U.S. dollar USD, the Swiss franc CHF, and the Japanese yen JPY. Each of these currencies has characteristics that make them attractive to investors during geopolitical conflicts. The USA dollar is the world's primary reserve currency, used globally in trade and held by central banks as a store of value. During conflicts, the USD tends to appreciate due to its stability and global acceptance. For example, during periods of global unrest, pairs like EUR, USD, GBP, USD, and AUD, USD often see a strengthening of the USD relative to other currencies. Options traders can use this information to predict the movement of USD-based currency pairs. In anticipation of a conflict, they may choose to trade options on USD pairs, betting that the dollar will appreciate as investors seek a safe haven. Friends, we have a super promotion. Bot is a paid tool, but you can get it absolutely free right now. Access to the bot is given to you forever. Follow the link in the description. Follow the instructions and start earning with the help of neural network with the accuracy of signals from 80 to 90%. The promotion, in which you can get the robot for free, will last 1 month. The bot gives an unlimited number of signals. Yes, you get the full version of the bot without restrictions, forever. He will triple your deposit on the first day. The trust you put in it will justify itself in the first hours of work. Attention! On our channel is a large-scale contest. We will choose 2 winners who will receive $1,000 for 1 random comment. You can win a great prize by following a few steps. Watch this video from beginning to end, subscribe to this YouTube channel, give a like to this video and write 1 comment on trading topics. I would like to draw your attention to the fact that only those viewers who watch the video to the end will participate in this contest. Only 1 message is accepted from 1 person, which must be thematic. Off-topic comments such as "I want $1,000" will not be allowed to participate. I choose the winners weekly using a randomizer. Our team publishes the results of the contest on our Telegram channel. Subscribe to it at the link in the description. In addition to the results of the contests there I publish important educational information that will help you quickly develop your skills and pump up your thinking for professional work with currency pairs and not only. Good luck to everyone. The Japanese yen is another safe haven currency, driven by Japan's strong current account surplus and high levels of domestic savings. During geopolitical conflicts, Japanese investors often repatriate their funds, bringing capital back to Japan and increasing the demand for the yen. This trend strengthens the JPY against other currencies, impacting pairs like USD, JPY and EUR, JPY. Traders on options platforms can leverage this behavior by taking positions on the JPY, especially during times of heightened international tension. If the global outlook becomes uncertain, traders might predict a strengthening of the JPY relative to other currencies, capitalizing on this safe haven effect. Switzerland's political neutrality and strong financial sector have positioned the Swiss franc as a preferred safe haven. During periods of geopolitical conflict, the CHF often appreciates as investors view it as a stable asset. For options traders, the Swiss franc's role as a safe haven can be an indicator of potential strength in pairs like USD, CHF or EUR, CHF. By understanding the unique behaviors of safe haven currencies, traders can develop more accurate predictions for currency movements in response to geopolitical tensions. So, I finished the final trade in the plus side. The bot gave out more than 10 accurate signals in a row. I earned $1,306 out of $1. Did you like the video, friends? Give it a like and subscribe. Bye.